Investor concerns over a slowdown in China put the brakes on stock markets across the region today, and Australia was no exception. For his thoughts on today's action, I spoke earlier to James Rosenberg from Macquarie Private Wealth. James, the local market tried to shrug off an uninspiring lead from overseas, halving its losses throughout the day. What does that tell you about what happened today?
Well, for a start, Andrew, it was a pretty quiet sort of day, and we did try to ignore the losses overnight, particularly when the Chinese market opened in positive territory. And despite being a pretty quiet market and no particular stock moving around significantly, we did see some sell-off later in the afternoon, not dramatically. We closed down a little over 20 points, and some of that's because of a reversal of the fortunes of the market in Shanghai and also some weakness across the region. The major stock that bore the brunt of the sell-off was a further decline in BHP, which took about 8 points off the index itself.
Well, another stock that got a real dressing down today, as we've already heard, is David Jones. What really annoyed investors about that result today?
Oh, there's a number of things, but particularly the outlook statement. The result itself, down around 20%, was widely anticipated by analysts, but the fact that their outlook statement for the remainder of the year indicated a further deterioration in their business did spook the market. The company's talking about earnings declining in the order of 35 to 40% for the rest of the year. They have expressed some optimism in the business with further store rollouts and so forth, and a big investment on their online business, as well as employing new staff. But the fact that they have been suspended for a few days probably exacerbated the market's reaction. But with a 35 to 40% downturn coming up, 11% is probably about right.
Well, another stock that was hit hard today was Oriton. Were its results really that bad?
No, I don't think they were that bad at all. In fact, I think they were pretty good. Their profit was up marginally in what's very much a discretionary retailer, Ralph Lauren products, handbags, accessories and so forth. But when you have a look at it, the company has outperformed the market reasonably significantly over the last quarter. And a good result, but coupled with a pretty cautious outlook statement, I think really saw the stock down on profit taking rather than anything that spooked the investors with the result itself.
Well, the stock going the other way today was Transurban after the fund manager CP2 announced it was selling its stake.
Yes, a big block of stock went through the market yesterday, and I think the fact that CP2 has been such a large investor, partially from their stake in Connect East, which was taken over by Transurban, has weighed on the stock for a while. This stock has underperformed the market in the last quarter, with very much a perception of that stock being an overhang. Now, a good portion of it was sold yesterday. That's a good thing for Transurban. It basically means that while the relationship with CP2 was pretty civilised, it was perhaps a little uneasy for Transurban directors and management, and the fact that they've now sunk below the 5% threshold really does indicate that they're not likely to be a predator, and it's going to free up Transurban management to get on with the business of running toll roads.
James Rosenberg, thank you very much for your thoughts.
Pleasure.